Hello, Chris Jones here with Astra Realty talking about another fun topic in commercial real estate, aka CRE. This topic is about wanting to know a little bit more about the financial side of your property, especially an income producing property, or if you're just going to be taking it over and you want to know how much is this property going to cost me about. It really differs from owner to owner because what one owner might want for the property, another owner might not think that's as important or might find a better person to do lawn care that's at a better rate. But anyways, this is just an example. This is not a real example. This is just kind of for entertainment purposes, just to kind of help you figure out a couple of things. Things we like to look at, such as operating history, rent roll, and property expenses, might be also called CAM. And then we'll also talk about tenants, pro rata share, and so forth. So again, this is just real simple. It's not complex. Every property is very different. Everybody's income for the property is very different, or expenses. So looking into operational history before you purchase a property, this is also something that you want to take a look at during due diligence. Sometimes you won't get some of this information in pre-due diligence until you sign an LOI. It has been accepted, or you move forward to your purchase and sell agreement. Could be called something else. And then this is your due diligence period, where you might have like 5 days, 30 days, 45 days. It just depends on what you all agree to, and terms are negotiable. But these are some things that you might want to ask for in due diligence. And these are some things that you put in your purchase and sale agreement or contract, some things that you're going to want to have access to. So you'll definitely want to ask for operating history, see what the owner has for that. Rent roll, that might say, you've got a building, the building has 3 floors, it might have 20 tenants inside. So you'll want to know who those 20 tenants are, the name of the listing agreement is in, or the entity, their unit number, the space they occupy, their base rent if it's just base rent, or also if it has other fees included. Is there any renewals when their lease expires, their original lease expires? You might have successive renewals. You want to know what that is. You might want to know if anybody's behind on payment, or what their security deposit is. So there's a lot of questions that you might want to ask so that you have a more broad understanding of the property. Also, when you're dealing with tenants, you might be handed the lease agreements, copies of that by listing broker or the listing agent who's also representing that property. You might also say in your purchase and sale agreement or contract that you would like to have sample certificates from the tenants, because you want to know that the tenant is going to say what they believe the listing agreement is. Just the case between last year and this year, the owner landlord hasn't promised the tenant something that's not in their lease agreement that you need to know about, because once you take over the property, once you own it, you have to abide by the lease agreements, and they are legally enforceable. So you've got to make sure that you can uphold those and honor those for the tenants as a new owner landlord. So you'll definitely want to get as much information as you can for the income of the property. There might also be something in there that the tenant is paying for, like parking or reserved parking spaces. It could be a number of things. Also, another important aspect is property expenses, also we call it CAM. For example, the property taxes could be about $45,000 a year. Again, this is just an example. Insurance for the properties, $18,000 a year. The CAM, which can mean the maintenance, landscaping, common area utilities, management fee, etc. Let's say those come to $62,000 a year. So all in, as reported for this purpose, of course, it could be a lot less than this, could be more, could be anything, $125,000. So you want to try to figure out, well, how I pass this along to my tenant? Well, let's just give an example. And again, this doesn't apply to my first example, the big building, all the tenants in there, but just for purposes, what I have here, let's say the tenant space is 4,200 square feet. Again, square feet, we're just using approximate numbers because none of us are perfect in our measurements. We're humans. And the building totals about 25,000 square feet. So you divide the tenant square footage by the building or the size of the property. So let's just say we're coming up with 16.8% of the tenant's pro rata share. So you're going to take the 125,000 right here, multiply it by the tenant's pro rata share, which we figured out up there, comes to $21,000 a year. You divide that by 12. So the tenant should be charged about $1,350 a month for this. So again, this is just real simple. It's not complex. Your property might be completely different, but for purposes of this video, this is kind of the scenario that we're going with, and just kind of help you get an idea. But if you can do your own due diligence, especially pre-due diligence, and work with someone who loves commercial real estate and is really helpful and helping you gather as much information as you can to make a really well-informed decision about your purchase.